Hi, everybody. It is Wes with Pikes Peak Trades, and I am thrilled to be giving the first ever members only video for our brand new community together. So I'm extremely excited to be able to do this. I think we're off to a great start. We're small, but we're mighty, and I think we have the opportunity to grow really fast. Um, Thank you for your membership, and I hope to give you the very, very best that I can. And that includes every weekend giving you a synopsis of what I'm seeing market wide. So whether you are a general stock market member signed up for tickers or for the Bitcoin and metals miner service, you're going to get all of it in one video. I think that's the least I can do for you participating here with me. And we have a lot to look at. So we're almost to the end of the month. We only have one more trading day in January. I want to take a look at a few monthly candles. We're going to take a look at a lot of weekly candles. And we're going to talk about some paths. And so let's start here with the QQQ monthly. And you're going to notice this is a nasty monthly candle. And it is one of the worst, if not the worst, January starts. I think for sure in the NASDAQ it is. We'll actually, as of yesterday it was, we'll see how we close Monday. But when a monthly candle slices through bullishly stacked moving averages like this, you know that there's some significant selling momentum. Okay, so the recovery today I think was crucial to try to get the Qs back above this 13 EMA by Monday. And that's going to give it a little bit more of a recovery look on that candle. Now, it is possible that we could then recover rapidly up to a new all-time high. And I'm going to leave that as my main primary count. And I'll talk about how we're going to be able to determine and distinguish between these counts when we dig into the small time frame details. We can go back quite a ways, and we can see that when we still have monthly MAs in a bullishly stacked position, sometimes these stabbing candles do recover, like they did here in the middle of 2010, like what happened a year later in 2011, like what happened in August of 2015. It recovered, and like it's actually happened all the way through these more significant, longer lasting sell-offs from December 2018 and then the COVID correction. So until these monthly MAs start rolling over, all the way over, there's no reason to put in a sky is falling count. Now, because of how nasty that looks, it does increase the possibility that we get some bad follow through. I think it also increases the possibility that we see much more volatility the rest of the year. In fact, my primary count says we've just set a very significant low. We're going to make a divergent all-time high, and that divergence would occur down here on the monthly. In fact, you're going to notice I can actually already draw this in here that we already have monthly divergence. Okay, so that in itself is enough to already say that we could be experiencing a significant rollover. The other thing I want to take you through is look at this monthly MACD. Okay, it is starting to roll over. I can't scroll over and have you look at the numbers, but if I hold this here and you look at the numbers on the left side of the screen, it briefly bear crossed today when Qs were at their lowest and then closed back above. I think it's crucial on Monday that we see a final closing reading with that above. If Monday is a decisively bearish day, it's going to throw a lot of cold water onto these bullish counts and increase the possibility that we just get a more rapid and nasty sell-off. Okay, so we certainly have to be on guard already looking at the monthly counts. Now for the weekly. So the weekly, we're going to see on the Qs a low that pierced nearly to the penny a 50% retracement of all price since the October lows of 2020. It's a nice hammer look. Earlier this week, it just stabbed above, or just stabbed back towards this lost channel right at the 50-week SMA, and that's what needs to be recovered next week. So I do still have my main count that we're going to make one more high, maybe towards the end of the quarter, maybe into April. I still want to leave it as an alternate that we still are going to see price correct down towards this volume shelf around 315. We'll go through those details in a bit. Let's take a look at the SPX weekly. And its weekly candle is even better. It was helped from the industrial and financial components and less of an exposure overall to tech. You're going to see a nice hammer off the 0.382 fib, that corrected price again from October 2020, back above the 50-week, back inside this previously lost channel, recovering some of the closing lows from last week. And I think that is significant. That is offering the possibility of a significant recovery. And we just need to see price steadily march up through the rest of this quarter in order to set one more all-time high. Now, a couple things technically that I'm looking at here. I think one more all-time high will set very, very noticeable and even more noticeable divergence on the RSI and the MACD reading, which are indicators that I think are really important for being able to determine if a longer-term top is in place. Now, it is arguable that that has already happened in the first week of January, so we absolutely keep those bearish counts in mind. Okay, let's stick with the longer-term time frames for these indices, and then we'll drill back into this, the smaller counts and individual names. I want you to look at the Dow. So the Dow with a similar weekly candle to SPX, it lost a very, very long-term supporting line, which goes back decades, but with today's help, recovered it and the 50-week. And I like that as an opportunity to try to get one more all-time high. And by the way that these fib out, I think the Dow could actually be an outperformer here, maybe even outperform tech as we look in towards the end of the year. Also want to show you XLF on the weekly. So also an important recovery, a channel, both this week, the 50 and the 34-week EMAs. Now, it was rejected at the downsloping 8, so we still have to be on guard that this primary top is in place and we just have a bounce, okay? But still, I'm thinking the possibility is looking pretty good that we'll actually be able to make one more all-time high across the board. Okay, let's get into growth and small caps. So this is a scarier monthly candle because on ARKK, the monthly EMAs are starting to cross negatively. So I think we need Monday to be a strong day. It would be great to recapture this 50-month SMA above 71. That would be a much, much better look to finish the month and give the possibility that we actually here have an ABC down, and then we're setting the stage for another massive run in growth. Growth has just been decimated. Most of us that love these names in 2020 and 2021 were left going, what in the world is going on? I'll show you what that looks like on Zoom here in a bit. And we're left to wonder, are we going to just keep going down? Now, even if we do end up with a lower target, I think we've got some fuel in place here for at least a bounce. So ARKK is more oversold than it was in the COVID crash weeks. So very, very oversold, which to me makes sense on this count. This was a primary degree. This is a bigger degree. This is a cycle degree. We've seen just a massive loss of price in most of these important names. So I do think at least a bounce is in place here on ARKK. And then looking at the daily, on the daily, we have double divergence on the RSI 9. And when that occurs, this is nearly a 2-month long divergence down here. At least I think we can see a bounce back to this lost channel, not a channel, just a diagonal here that rejected to some big selling around 85. So that's at least a bounce target over, let's say, the next month. And if it can clear this, back test and move up strongly, then we've got a potential bull count in place. So we're also going to look at IWM. And IWM, a really similarly nasty candle to ARKK, although its monthly MAs have not yet crossed bearishly. But as I mentioned before, when price slices through these with seemingly no resistance, you know that you really have something to worry about. There was a nice recovery this week. It was actually today, right off of the 34-week EMA. And is that enough? Is there enough market wide here to get one more high? Now, the other downside is we're seeing, and it's very, very likely going to print a bear cross on the monthly MACD. Okay, now, when that happened in October of 2018, here at this vertical line, price barely recovered the next month, slightly up, and then went just a stabbing move down again. There are instances of a monthly cross that recovered bullishly. So that happened in October of 2011. And here in July of 2014, that eventually recovered to a new all-time high. So there's mixed data. It is possible that we could see a recovery, but it also is a count like ARKK that would only have this in a bounce. And I think it's better for me to show you this. I might not have it mocked up. There we go, on the daily. Now, double daily divergence, just like ARKK, and I think at least a bounce count. So that would give February a chance to recover before March and probably April are bearish. Okay, so these are just things to look out. And I'm probably offering that for ARKK and IWM, just as beaten up as they are, we're going to have to see some market outperformance here in order for this bullish count here in white. I mean, I think next week is just going to have to be extraordinarily bullish in order for this count here in white to play out to a new all-time high. But what I think I am seeing is the possibility at least for a bounce before another move down. Okay, that takes us through all of the indices and ETFs, all of the bigger time frame pictures here that we're looking at. So let's drill down into the details. And so I want to take you into the small time frames here. And let's look at SPY. Okay, so actually, let me. I haven't mocked this up correctly yet on SPY. Let's look at SPX because I've got that mocked up correctly. So what we're looking at here is three possible paths. The bulls did what was needed today to break out of a downward diagonal. I think that was significant, but it's possible that we see more chop next week. And if that occurs, more chop next week, we would end up finding resistance immediately. So if we just, Sunday night futures are red, Monday opens down, boom, Monday, Tuesday, we're down back towards this red line, we bounce, and then we fall and break it, we've got that possibility here. Now, the other possibility that's bearish is we go ahead and break this, because this was a huge amount of momentum here. Lots and lots of momentum. If I click the volume here, take a look at this volume that kicked in. Okay, that is encouraging for the bulls. We just got a lot of volume on the bullish side there. Okay, now, if we meet resistance, The resistance level is about 4,500, that key psychological number. This is what I think is more likely to happen. We do move up Monday, but what happens at 4,500 is crucial. Okay, if we've got some power to the move, let me put another fib on here, and I can kind of stack these, all these in here, then we would hit it, very slightly recoil, and then break back through to finish. And that's the follow through that bulls have to have. And that is exactly what has been missing. There has been no bullish follow through from days like today. I think the sentiment out there, from what I gather, looking at institutional readings and also just my feed on Twitter, still very bearish. I think the most surprising move next week is the white bull count. But I think if you are a short-term trader and you're holding anything through the weekend, or you get involved on Monday, I think you need to exit at 4,500 and just watch. It fits a fib with the white. We let it recoil. And if we can back test and hold this blue line right in there around today's closing value, that might be what we need to actually break this flag. But right now, this is a very valid bear flag. And you're going to see exactly the same thing on the Qs. So the Qs did close above that key pivot, above 351. 352 would have made me feel a little bit better. 353 would have recaptured this downsloping MA. I think that does break, but there again, we've got that potential bear flag. That's right around 360. Okay, so it'll be interesting to see what happens. I don't have the triangle count charted on this, but it would be the same. An A, a B, a C, a D, an E, and then we break it. We got to be aware of that as well, and I'll call that out as it happens. Okay, for some individual names, let me get back to some bigger time frames here first. And let's get into here. And let's take a look at Tesla. Okay, so on the weekly, Tesla stabbed right into here, right beneath its channel, and touched nearly to the tick its 50-week SMA. Recovered with a nice recovery today back inside this channel. So I have increased the degree of this count to put it to a primary 4, right at that 0.382 fib, and leaving the possibility for another bull run. Okay, if that is wrong, just like I'm showing you on some other charts, I still think it bounces higher up towards the MA and this previous gap resistance right around 900 before another leg down. So that obviously corresponds with that red QQQ count that I showed you for the minor 4. Okay, now Microsoft. So Microsoft, this is one of the candles that really has me encouraged that we set the lows. I mean, look at this candle. It is a bullish weekly engulfing green hammer. It's about as good as it gets. So I could have just looked at this name and said here, I think the low is hammered in. And so I'm definitely leaning this way. This is a wonderful look from Microsoft. I'll show you on the small time frame. We also have on the daily an outside engulfing candle. Okay, so what I'm not exactly sure on the small time frame for Microsoft is what exactly is its small time frame count, because I'm not so sure how these internals count yet. So this high right on its earnings gap was not quite broken today. Certainly not broken. Let's see. Yeah, not quite broken. Maybe a move up and then a retreat. And that's going to be difficult. I'm going to have to look at this a little bit more to see how Microsoft needs to count a little bit better, okay, on the short term. Back up to Tesla. Here we started our Discord this afternoon. and it was fun. Didn't have a lot of members. I know I didn't give you much of a heads up. It just came out today. But thanks to those that were there. And I had made the comment, look at Tesla pulling in here. It was late in the day, and I typically don't take trades so late in the day, but this would have been a nice one. This would have got you right here, nearly a $30 move. That would have been a sweet day trade to end your day. I think this strength continues, and there's those $900 targets. So the count to me is a little bit more clear here on Tesla. Okay, back to some other time frames here. Let's take a look just through the individual names on Google. So I like Google's setup. Really like what it did today, strongly closing above the 8 EMA. Now, look at this on the daily. When was the last time it did it with a candle that wasn't suspect? Well, let's see. Not suspect. You got to go all the way back to December. There at least was follow through. At least follow through. It has not closed above in 2 weeks. That's definitely a suspect candle. This is not. That is nearly a bulls in control candle off of lows. And so I really do like Google's setup here. I know that other Discords hit this one out of the park today, and I don't think it's done. So I've got it a 1-2-1-2. It's in the middle of that 3 of 3. It would not surprise me on Monday if Google was at 2,700 plus. Okay, let's look at Facebook. So Facebook was another call out on the blog today, and then also in our Discord, and one of our members just nailed it. Took some great profits off this today. Facebook with an outside bullish candle. And on the small time frame, I think it's just like Google within a 3 of 3. So I would look for continuation. I love the close above the Thursday high. I love the close above the intraday high today. And I think it moves up strongly towards 307. This would be a great place to take profits. Wait for a little bit, excuse me, of a pullback. And then we have a crucial diagonal here to break above 307 to get into the rest of the bull move. Okay, now a name in this set of big tech that I'm not sure about is Amazon. And Amazon did have a nice candle today, but I just am not sure about its short-term count. It doesn't count to me as clearly as the others. So Amazon is one that I am staying away from. I'm not sure how to count this. And this does kind of fit into that potential bear flag pattern. So this has me a little bit worried that maybe that's what we're seeing here is because this is pretty choppy, that bear flag. And that's why that red count on SPX and the Qs you have to respect. If it is, in fact, a bear flag, I still would expect the top to get touched here at double resistance, about 29.40. Okay, let's take a look at Apple. So Apple got the weekly and the daily here. And another really nice weekly candle. When the big names, Microsoft, Apple, are putting in big weekly candles, it's really encouraging. And it closed above its 8 EMA. So great earnings, great reaction. I have Apple poised for another all-time high run. We're going to see on the daily. This proposed plan played out really, really well today. And on the small time frame, this was blogged and messaged and then talked about here in our Discord. This backtesting move was what you wanted. Boom, there was your entry. 2 big green candles, and for a day trade to end the day, that would have got you $4 on that day trade. That would have been sweet. I don't think it's done. I think we see it up here towards the mid 170s. Okay, those are all of the big tech names. Just a few other names. We should include NVDA in here. Now, NVIDIA was also posted about on the blog. It had a failed move up, and I should have been a little bit more clear on that I was expecting. We should always expect a higher low pullback. And that's kind of one of the ideas of Elliott Wave is when you can create a 1-2-1-2, the next wave 3 is the one you want to play. And that's right where we're at. Notice after hours, it's up to almost 230. I think we've got resistance to hit Monday around 234, 235. Let's see if it coils back. And a break of that could give us a really, really nice target into the middle towards the end of the week. Now, do we have significant lows in place on growth names? So what about a name like Shop? Well, huge weekly volume on Shop. We're talking volume in the realm of the breakout moves that were happening back in the COVID days, March, April 2020. That gives me hope. We've set a significant low and we can move up. I like Shop's short-term count. I posted about this a couple times. I think its minor 2 just needed a lot more work as markets found a bottom. I see a 1-2 setup for a 3. So my plan for Shop, let me get my little path tool here. There it is to look for a move up towards this resistance, right around 900, a back test, maybe 890, and that would be with some green igniting candles, 15-minute candles, the trigger to get us up towards this target. So I really like that possibility on Shop. And that's going to be certainly high on my list for Monday if we see bullish moves. Okay, now just briefly, Bitcoin. So Bitcoin closed today above the 8 EMA. Now the last time that it did it was back here, the end of December, and that was followed by a top and a tumble. I think Bitcoin has more room. So this is like the bounce counts in the other names. More room up, 41 to 45. The short-term Bitcoin count is playing out nicely. We saw a move through this neckline, back test. Now I think we're through the potential bear flag. That if we can seal the deal and get up there towards 39, 40,000, then this was just some geometry, not actually a bear flag. But a failed move obviously puts us into a lower low count. Okay, now we'll finish here with a little bit of metals and miners. And still some serious concern here is, did we have a big failed breakout in gold? So down here towards the 0.786 on the retracement level, and it's just kind of looking like everything that it's done since last May, just a bunch of chop in this range, but contracting to the point where maybe I need to reconsider that this isn't a nested set of 1-2s, but a triangle. And that would still be bullish. But we have to get a breakout that actually holds in order for metals and miners to actually find some traction. If the downside is lost, we're likely looking at an equities collapse as well, a deflationary set of conditions that would be extremely bearish. So just one more name here, GDX. Really ugly weekly candle. So lost this low, so this too has to slide over. Did not lose the September low. It barely held it, but another touch of the 200-week SMA is maybe what it needs to get back and get going. Okay, so we're going to see, I think metals and miners do need to participate if we're going to see a general market move up. Let me just leave you with the last thing, is to just put your eyes again onto that short-term SPX count, because this is what we're looking at. So here are the possibilities. Immediate move down bounce, collapse, there's our triangle, breakout, resistance, break back under, that's our red count, move up, consolidate, move out, back test, and up, that's our white count. So I'm going to take you through all those details. Join the Discord. I think it would be great to interact there. That's where I can give real-time updates on the fly. That's where we can share trade ideas. We can ask questions, get immediate feedback. The blog will still be the main place for housing the content, but the Discord is where it all happens live intraday. So thanks again for your membership. I'm really having fun doing this, and just hope there's many, many, many more great days and weeks ahead of us. Thanks again for being a part of Pikes Peak Trades, and spread the word. We've had a lot of success already. I think we've got some happy members already. You've got a happy owner, and let's keep it happening.